All right, so I want to show what I'm speculating on AMC. We're going to start with 5 minute candles, and we're looking at everything that happened today on Friday. As you can see, this white horizontal line on the bottom, I been drew this line. I drew it off of the monthly, I think. Maybe the weekly. Hold on, excuse me. Yeah, I think I drew it off. Maybe I drew it off the daily. But the point is that white line, it represents, let me go to the 4 hour candles. It represents a change in the market. So in the past, that was a support in the past. So I'm going to try to zoom in and see where that white line came from. Okay, apparently that white line came from over here. Back in I don't know what year that is. But basically, that bottom line is a change in the market. So we're going to trace the whole journey daily. Candles and this red line in the middle where the price is at now is the bottom of another support. So broke support and it's going into another range on the bottom right here where that white line is, and that white line represents stage 1 of the market. Anything below the white line is basically stage 0, where people are mainly running away from the stocks. But when it gets to the white line, that's when stage 1 of the market takes place and people are more interested in the stocks. And as you see, the last candles for daily is going right into it's not supporting, it's breaking through. And then if we look at those moving average lines, the purple line represents the 50-day moving average, meaning that the value of the stock can go as high as right here, which is $22.70, maybe $22.80. But right now it's trading above the 20 moving average. The 20 moving average price is $16.95 or $17. So right now the price is above that moving average. So we're going to go down to the 4 hour candles. And I'm going to zoom right in. Let's go for the entire week. And we see a couple of times the price, after dropping to $13.40, it came up to $18.39, around that price point. No higher than $18.85. And it touched once, came back right back down, stayed below the 20-day moving average right here at 1465, came right back up and touched 1589, dropped right back down and touched again at the 1460 range, then sprung right back up. Had a little bit of a consolidation right here on the 9th of February. And then from that little squeeze, it jumped all the way from 1660 to 1839. I think that's where I made my first winning trade right there. I think that's when I came in and then caught it up to this price right here, which is about $18, $19, and then it dropped right back down. And I caught this one too. I bought it like 1780 or something like that, 1760, something like that. And I wrote that $17 all the way up to the 20. I think it was like, yeah, I think it was like, I want to say $20 and some change. But anyway, I saw that one happen. So this right here is where it retraced right back down. So from $20, it came all the way back down to about $17, but it didn't fall under 17, which is interesting because something that high that go all the way up to $20 and retrace just and it support right back at $17. That shows that it definitely should not fall under 1770 maybe, or maybe it should not fall under 1725. That'd be very low. And I'm assuming that since it fell right here and bounced right back up to looks like 1970 maybe 1980, so it caught itself and got back to $19, and basically we're seeing a small uptrend. So we're going to switch to the 1 hour charts and watch that same wave again from 1465 all the way up to $20.96, and that fall. And this is where it gets interesting because after going up from 14, it looks like a 40 to 30%, 30 to 40% rise in price, and it didn't retract that down because normally when it goes this high right here, it should drop all the way back down to $16 or something like that. But maybe it will do it over time, but it's not doing it right now. So we have testings after the $20.96 tested one time. Actually, yes, tested one time at 1830 and then tested again at 1825, it looks like, and then tested again at 1830. So every time it hits about $18.30, it's been going up. So it hit that price a lot and then went up, and we're getting a little bit of consolidation right here at the tail. And that's what happened on the final hour. And these small little candles after hours mean a lot. It looks like it's landing on a red, which means that it may just very well sell off. But my bet is it's going to sell off right back down to $18.30 something cents. It's going to respect that moving average of 50, the 50-day moving average, and then it's going to shoot right up to $20, and then it's going to drop down to 19, maybe 19.50, and it's going to shoot up to $20, maybe even higher, until it's right off the charts, so to speak. It could easily hit up here. Let's say it's going to hit here, $20.40. So definitely going to hit $20.40 sometime next week. After it hits that $20.40, I have no clue. So I'm hoping that it goes above that and it hits $21. And then if it hits 21, I might sell. Most likely I will sell at least 2 of my contracts. Might sell 3 of them. But depending on how the bars are looking, if they're looking pretty strong, like we're getting big bars over here, see large bars right here, we're getting big bars, then I'm going to most likely hold on to it. But if I'm getting small bars, like it keeps going up, but each bar is smaller and smaller, then I'm definitely going to drop it. And the way I'm going to do that is by looking, not the 30, but I like to look at the 15-minute candles. And I like to see what they do. I can see the range. And then I'll dial it down to 5 minutes. And the bars get a little bigger, but I can definitely see what's happening every 5 minutes. And then that definitely lets me know, is it getting weaker or is it getting stronger? Because that this allows me to confirm what's actually happening on a more tighter time scale. Like right here, you can see it bounced on 1851 1, 2, 3 times. It bounced on 1850, bounced 3 times. And that's very interesting in itself because it tried to go below that white line, which, like I was stating before, once it gets above this white line, we're in another form of market. We're at level 1 market. That means people are paying attention. The basic people are paying attention. And then it's going to get into phase 2 of the market. How far up but in price? Let's go. it has to be $41 was the last phase 2. So after it proves that it's going to stay above $20, the next phase will be all the way up here, 30, what we got, $35. And then from 35, it can easily jump to 41. So let's see what happens. Oh yeah, look at these moving averages. Where are we at? So this is why I also think that the price might go down some more, because it is trading below the 50 moving average. Even though it's bouncing off of the 20, the golden line is bouncing off of that. It might respect that 20-day moving average, but it's still below the purple line, which is the 50-day moving average. And it's still below the 200-day moving average, which shows that, hey, this stock can still go down. And then when we look at the weekly, it's still in a downward trend. If you look at that downward trend now, we do have that green doji star at the end, which is a clear sign of reversal, but we also have a green doji star right here on, what date is this? The 22nd of October. And then after that green doji star, it dropped a little bit, but then look at that. The next 1, 2, 3 weeks, it went right back up. It even surpassed the last doji star of 44.16, and it went up to 45.84 about 3 weeks later after it dropped down. So very interesting indeed. And then after that, it just fell all the way down to this doji star right here, which is the 11th of February. All right, that's my analysis. I know it's very long-winded, but that's where I'm coming from, and I'd love to hear your thoughts.